Ladies and gentlemen, my name is Milla, and I present to you some of the best stocks to buy during a recession. But why do recession-proof stocks matter? Because during a recession, inflation rates are high, unemployment rates are high, and interest rates are rising. Therefore, people don't want to spend their valuable money on flashy items like electric vehicles and Pelotons. Instead, they're spending their money on necessities like groceries, their health, and the roof over their head. Now, recession-proof stocks are stocks that do not fall as much as the market or actually post positive gains by being economically resistant to the effects of a recession. Now, it's important to diversify your portfolio to better withstand a recession by adding some defensive or counter-cyclical stocks that perform well from sectors such as consumer staples, utilities, bargain retailing, and healthcare industries. I hope you find some value from this video and make more money coming out of this recession from recession-proof stocks that are not only defensive, but actually make us money through dividends and capital appreciation. Coming in at number 1, we have Johnson & Johnson, ticker symbol J&J. Johnson & Johnson is a pharmaceutical giant that's often considered a safe haven investment during recessions due to its ability to constantly generate revenues in areas such as pharmaceuticals, beauty and health products, and medical devices. With a history going back to 1886, Johnson & Johnson has seen its fair share of recessions and has been able to generate positive returns to investors and provide constant dividend payments to shareholders for passive income. When money becomes tight in a recessionary environment, people will forego entertainment and leisure but will still continue to buy Johnson & Johnson products like Tylenol, wipes, diapers and baby powder for their children, and pills from hospitals. Johnson & Johnson has a dividend yield of 2.7% and a market cap of over $400 billion, and their consistent level of demand has made it one of the most valuable companies in the S&P 500 for people wanting strong dividends and low volatility. Coming in at number 2, we have old reliable Coca-Cola, ticker symbol KO. Founded in 1892, Coca-Cola doesn't only sell everyone's favorite soft drink, but they do generate revenues from other drinks, edible goods, and snacks. Coca-Cola survived the high inflation of the 1970s and the Great Recession from 2008 to 2009, proving its resistance to recessions. Despite high inflation and recession fears, Coca-Cola has managed to increase its net revenue and earnings per share year over year while increasing its dividends, proving how much this company has on hand. Coca-Cola has a strong moat where they can raise their prices if inflation goes up and consumers will still buy their products. With a dividend yield of 2.87% and a market cap of over $250 billion, Coca-Cola is truly a consumer staple and is great for long-term investors looking for strong dividends and steady capital appreciation. Next on my list at number 3, we have McDonald's, ticker symbol MCD. McDonald's has a brilliant business model and worldwide brand. No wonder why they've grown their revenues and shareholder value since 1955. One reason for this success is the company's positioning as a cheap and convenient option for consumers trading down in a recession. Fast food companies like McDonald's actually stand to benefit from a recession as smaller bank accounts opt for cheaper alternatives and people seek out cheaper, delicious food, which is why McDonald's has performed better than average during recessions. It's funny because McDonald's is not only a fast food chain, it's also a real estate giant. With $39 billion worth of properties, if you invest in McDonald's, you're also a real estate investor as well. With a dividend yield of 2.13% and 43 years of consecutive dividend increases, McDonald's is a great company for investors looking for growing capital appreciation, a healthy dividend, and real estate allocation. Next up at number 4, we have Walmart, ticker symbol WMT. It's no surprise that discount retailer Walmart actually outperformed the S&P 500 during each of the past major recessions. During the Great Recession from 2007 to 2009, Walmart stock delivered a 9% gain from a total return basis and a 5.6% gain from the latest COVID 2020 recession. Americans can't go without buying groceries when times get tough, but they can save money by bargain hunting at Walmart, which is why their sales continue to thrive during economic turmoil since 1962. Walmart's customers come from low, middle, and high income earners, which is why they've been able to do such high volume of sales and have other areas of strength such as a growing ad and digital sales and e-commerce. With a dividend yield of 1.55% and a market cap of nearly $400 billion, Walmart will continue to outperform in a recession due to their everyday low prices and is great for investors looking for steady capital appreciation, a good dividend yield, and a growing e-commerce business. Coming in at number 5, we have Costco, ticker symbol COST. Costco is generally regarded as a recession-proof stock as most of its profits come from its membership income and members are incentivized by its bargain prices. The membership fee it collects is its main profit center. Pricing merchandise barely over cost, it's better positioned to pass along rising costs to the consumer. This explains how Costco has been able to increase its net income, ROI, and revenues every year, even in the latest COVID-19 recession, proving how resilient this company is even in an inflationary and recessionary environment. With a dividend yield of 0.67% and a market cap of over $230 billion, if you're a long-term investor looking for more of a growth and safe harbor play, then Costco is one to consider. Next up on our list is healthcare company Merck, ticker symbol MRK. Multi-millionaire shark investor Kevin O'Leary vouches for and invests in Merck as it's a great global healthcare company offering pharmaceuticals and animal care segments. Now, being in the healthcare sector, Merck is able to capitalize on the assumption that people will prioritize their health no matter if the economy is in a recession, hence why this company is able to generate great returns year over year. Merck has been proven to be resilient even in a recessionary environment, and with a strong dividend yield of 2.62% and a market cap of over $250 billion, Merck is a great stock for long-term investors looking for strong growth and great dividends. Coming in at number 7, we have Waste Management, ticker symbol WM. Now, someone has to take out the trash, right? I mean, I haven't heard of anyone say that when they cut back on costs that they cancel their trash or pickup removal. I mean, that's just not going to happen. That's why waste management services has been in constant demand as the trash services industry has been resilient and steady even during a recession. Now, trash services operates as an oligopoly with only a few main competitors dominating the market due to a high barrier to entry, hence why waste management can actually control prices during an economic downturn and turn a profit. With a dividend yield of 1.68% and market cap of over $60 billion, Waste Management should be on investors' radar as they provide a healthy dividend with strong stock growth that has actually outperformed the S&P 500. At number 8, we have Procter Gamble, ticker symbol PG. Founded in 1837, Procter Gamble needs no introduction as they're a consumer's product giant with a portfolio of brands such as Crest toothpaste, Charmin toilet paper, Febreze air freshener, Pampered diapers, and the list goes on. Procter & Gamble has made dividend payments to shareholders for over 130 years and has raised its dividends for over 60 consecutive years due to their high cash on hand, which is great during a recession. With a dividend yield of 2.55% and market cap of over $330 billion, Procter & Gamble is a great stock for long-term investors seeking steady capital appreciation with high dividend payments. A little flavor of real estate is going to be a REIT called Vici Properties, ticker symbol VICI. Now, REITs such as Vici Properties have the highest quality tenants because the people that rent from them are large corporations and businesses, so you know that this company is going to always have a constant stream of premium revenue. Vici Properties has been able to earn extraordinary revenue and beat on earnings per share since the latest recession and has actually outperformed the S&P 500 in the past 5 years. With a high dividend yield of 4.35% and a market cap of over $35 billion, Vici Properties is great for long-term investors wanting to own a piece of real estate without the hassle of physically owning a property, coupled with high dividend payments and high returns. Last but not least, we have an ETF by Vanguard, or Vanguard's High Dividend Yield ETF, ticker symbol VYM. Now the reason why I included an ETF like VYM is because I know some investors don't want to put all their eggs in one basket and actually want to diversify their portfolio, which is great with an ETF like VYM. Now the great thing about VYM is it has high allocation to sectors that do well during a recession, such as healthcare and consumer defensive. It also has 3 stocks that were talked about in this video in its top 10 holdings, such as Johnson & Johnson, Procter Gamble, and Merck, but it also has great stocks that weren't included on this list but could have been, such as Eli Lilly, AbbVie, Pfizer, and Home Depot. With a dividend yield of 2.98% and assets under management of over $44 billion, VYM is great for long-term investors looking for lower volatility but a high dividend yield. Now this is great for recession because you will always get a constant stream of high dividend payments, but also that lower volatility which will protect your net worth. Now with all that said, those are my top 10 recession-proof stocks to invest in during recession. Now is there a better list out there? Probably. So please, comment down below some top recession-proof stocks that could have been included on this list because I always appreciate your feedback. Before you make an investment decision, please do your own research and research the company's history of earnings reports, their business model, their future growth projections, as well as their fundamentals. Please click that subscribe button because your support is greatly appreciated, and like the video because this cute puppy did. As always guys, I hope you have a great rest of your day, and I'll see you guys in the next one. Peace.